the zero because I can't touch it. I need to touch it.
That's what they tell me. If they created physical cryptocurrency, maybe you got something.
Oh, I like this shout out from Lone Sophos. So all I know is BMF, blowing money fast.
That's another great one.
That's
Rick
our
Ross.
boy. See, you didn't even have to look at the chat. We used to have Rick Ross as the intro to this show. Right now we've got DMX, rest in peace. But it's not even the full, it's like 5 seconds. It's just an annoying whistle. We're getting Hustling back or something from
60 seconds
from Ricky Rose back on the show.
Fast.
Yeah. We'll just sit here and kind of
Teflon
bop around as the in-house pyrotechnics.
And everybody turns off the show because they're like, what the heck just happened?
Yeah. Well, I think
60-second Rick Ross intro.
Can't hurt.
Okay.
Anyways,
I didn't mean to step on.
I want with the intro, I want some sort of smoke or fog or something. So the first 5 or 6 minutes of the show, it has to dissipate. You can't really see us. It's just a cloud of smoke.
I think they did it last night for the Steelers game. They do this. I don't know why they keep doing this, but they do the fireworks before the night game. And then for the first quarter, there's smoke on the field. And you're like, is it foggy over there?
No, it's just smoke, dude.
And then in the second quarter, it's just fine. And it's I can't imagine putting out a visual product where there's just smoke on 25% of it. But
we're going to do it here on the show coming soon. Yeah. But one last thing I wanted to kind of hit you with, Frank, just a couple, I don't know, this show got out of control real quick today. Happy Monday. But what I wanted to talk about just for a brief second is that analyst from Crypto Quant has highlighted that there's now 19 million ETH that has a market cap right now of about $50 billion.
Okay.
19 million ETH that has been accumulated and is now held by what they're referring to as accumulation addresses. This is a 65% increase from the start of the year. Accumulation addresses are those wallet addresses that have been identified as long-term investors with no prior withdrawals.
Okay.
So point being, in the same way that we talk about illiquid supply with Bitcoin, where you have a lot of people that are holding it, stacking it, acquiring it, hoarding it even, you're seeing something similar here in Ethereum. And so obviously the price has lagged Bitcoin quite a bit, but you could again have similar supply dynamics where if there's any catalyst whatsoever, and this is true of Bitcoin, somewhat true of ETH, given that it's I'll call it semi-deflationary or disinflationary. It can be at times because of the burn mechanism. There's not a finite supply like there is with Bitcoin, but you have a similar setup where you could see a massive squeeze in some of this stuff because people just hold this, and whether you believe it's realistic or not, a lot of people have these insane price targets in their head that they're not letting go of any of this. You got Michael Saylor out there. He's his message is don't ever sell your Bitcoin. Are you insane? Don't ever sell it. You're going to need this when everything just goes to shit, right? From a financial perspective, whether that happens or not, or whether you agree or disagree. Just the reality is that a bunch of people just hold this stuff and they're not selling.
Well, and it's interesting with ETH in particular because the demand dynamics are so different than Bitcoin. You might say, oh, well, it doesn't have the same supply dynamics whereby there's only so much, but Bitcoin doesn't have the kicker on the demand side, which is ETH, a lot of demand would potentially come from technology
more
advancing in applications built on the Ethereum network. So a couple interesting things going on.
A lot to talk about. I know we spent a bit of time on the election here today. I think just getting past the election is a catalyst in itself.
Yeah, let's get past. Is it next week? Is it on Halloween?
It's November 6th, I believe. 6th. Yeah, it would be great if the U.S. election was Halloween.
Might make it more fun.
You'd have a bunch of people in costumes going to the polls. But we got the election upcoming, so we'll see what happens from there. I mean, market is starting to trade a little bit better to the top end of that trading range, which is 50 to 70, closer to 70, obviously, right now. But some positive things happening under the surface. We didn't get to cover everything per usual, but we will be back next Monday with my man Frank. Glenn is here on Wednesday. I'm excited about that. Don't make it seem, didn't mean it.
It's just not as good. It's good.
Yeah. It's not as good. Yeah. Anyways, that's going to do it for our show. As always, thank you for watching. Thanks for tuning in. Victor Jones is up next with the price of truth. Apologies for running over a little bit. We'll be back on Wednesday. Until then, I'm Ryan.
Frank.
Peace. Rock.
paper.
Scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll go scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I'm on the road for work quite a bit. In fact, I've been on the road crisscrossing the country for much of the last 25 years. Yeah, I've logged a lot of miles and met a crazy number of people along the way. Strangely, I remember emails and trades better than names and faces. So when walking through another airport this past weekend, someone with a familiar face stopped me to say, "Hi." He said he was a longtime Tasty fan who met me years ago at a Traders Expo. Before I could say, "You look familiar," he told me his email address, and it was like we were old friends. I even remembered the last trade he emailed me about over 3 years ago. I'm not sure if it's a feature or a bug, but my brain is just wired differently. At Tasty, we have worked really hard to make finance fun and engaging for our clients and our employees. Much of our success has come from turning a generally perceived negative industry into a positive and challenging experience. So why does it seem that nowadays everyone is so angry and so negative? And it's not just in the financial world. People are angry everywhere, whether it's social media, politics, sports, news, entertainment, and even travel. People are mad about something. I always wonder why more people and more companies don't try to use more kindness, humor, and smarts. It's not that complicated. People think angry sells, but it really doesn't. Nasty is not a feature. What I've learned from years of traveling is that angry doesn't make you smart or rich. Angry just makes you into an insecure fool. Contrary to the mistaken old adage, nice people do finish first, and that is our lifeblood at Tasty.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. We're here to support whatever you're looking to do. We have the tools that you need to be a successful trader.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Move with the rhythm, shake it up, stop when the clock hits 13. Sing 1, 2, 3, 4. Cause no one can do it like we do it, like we do it, like we do it. Cause no one can do it like we do it, like we do it, like we do it.
Rock, paper.
Scissors? He just played paper. He'll do it again. No, rock. Men statistically play rock, but he played paper and lost, and the mind works in patterns. He's going scissors. He knows I know he'll scissors, but knowing I know he knows.
Scissors, shoot. Thought we were doing rock, paper, scissors, shoot.
It's always rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
Oh, yeah. Tasty Nation, good morning. Oh, yeah, it is Monday, October 21st, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, The Price of Truth, a little podcast. A little podcast that explores the incentives that govern our world. Sometimes the idea is simple. We have great minds come on and share great ideas. But today, my good friends, we are running solo. It's just you and me, which means it's a highly participatory show. Our amazing behind-the-scenes producers and engineers are going to throw up all of your screen names and comments on the screen here in just a second if they haven't already, which means if you want to be part of this running dialogue and conversation, there's only one place to do it. That means even though I love you, if you're over there on tastylive.com, I love you if you're on the Tasty Trade desktop and app and mobile applications listening or watching. But if you want to be part of this conversation, there's only one place to do it. Head on over to the evil Google YouTubes, type in Tasty Live, go to the live tab. I think that's where they hide me. And then click on a big red thumbnail with this big inflamed head. Jump in the chat, introduce yourself, tell us where you're watching from. If you want to, you can say your name. Probably I wouldn't do social security or bank account numbers, but that's up to you. But more importantly, tell us what you're long, tell us what you're short. Just type in random ass characters and we can spoof the Google algorithm into putting us in front of more and more people and growing this little evening trading community. I think we're doing a pretty damn good job. Just for one guy, 2 days out of the week, just barking into the ether out of basically a storm shelter. Some sort of doomsday bunker, as somebody said in the chat. And then the other days, actually talking to smart people. I think we're doing a pretty damn good job growing this community. So do me a favor, help spoof the algorithm, keep the chat popping. You know, every once in a while, just check in. You know what to do. We should say, speaking of the people, this is a little podcast that we like to at least pretend that it's by, of, and for the people, because there are so few things that seem to be, or remember, that this world, at least our world, should be by, of, and for the people. Let's say what's up to the people. Lone, what's going on, my friend? I see you. Cato, Bah Humbug, Cactus Leo, Donna Ski. I see you. I'm on one today. I'm feeling terrific, actually. Alan, what's up? Vince K, my man from Iowa. Great to see you, my friend. Salt to the earth out there in Iowa. You know what? I was watching some documentary about these are the worst kind of stories when you don't have all the information and you make people kind of like sit there and wait for you to put your ideas and thoughts together. The carbon dioxide pipes that they're trying to put through Iowa. I think RFK or somebody did like a 30-minute documentary on it. I forget the company that was actually doing all the pipes, but they were bought because I looked it up because I'm crazy and I follow these things down the rabbit hole. They were bought by ExxonMobil. Anyways, shout out to the people in Iowa. That was a long way of saying hello, Iowegians. Is it Iowegians? I know something about your little place. That's basically what it was. That's called rapport building, but it was a horrible story. What's up, Mike Castillo, Osborne Graves, Pat Smith, Joe, Hans, my good friend. What's up? Hans says, if you're going to be in Singapore, can you spit some gum on the ground? I want to know if they actually put you in jail. I think it's $100 ticket. It might have gone up since inflation. I think it's $100 ticket, my friend. But thank you for trying to get me incarcerated. Dov, what's up? Sterling, good to see you. Pat Man, and many, many more. I would say what's up to all of you, but I cannot because I'm contractually obligated to say meaningful things that have some sense or in some way related to price action either today or into the future. It is good to see all of you, though. hell of a start to the week. Hell of a start to the week. Most of the majors were a little bit lower for most of the day. The Nasdaq was trading underwater too until a little pop towards the end of the session. We'll take a look at that, led by Nvidia, climbing up to new all-time highs. But for the most part, stocks were weaker, and a lot of the themes that we've been talking about here, China leaked lower, vol lower, as we said, that we would not be surprised if we started to see just ever so slight lower leakage here in some of those names with vol I don't say collapsing, coming in. We saw that. Another one of the things we talked about last week was just being careful about the Russell Nasdaq spread. I don't know why. I don't have great defensible data for that. Another thing we've been talking about is the potential for the long end of the curve to keep lifting. We are hoping for them to rally bonds. Is it because we're bullish bonds? No, it was because we wanted a better entry price to put on some new shorts. And we got a 1 point rally to maybe 2 points in the bonds last week. Not much, right? From 120 up to almost maybe 1.5 points is all they gave us last week. That wasn't enough. We were kind of hoping they'd get them back up to 123, 124 in the long end of the curve. They did not, my friend. So at least I don't want to talk for you. Maybe you were making tons of money today as the long end of the curve of bonds dip more than a point, which means bonds move inverse to yield. So as bonds go down, yields go up. Just for everybody, if that's a new concept. So forward size ZB is the 30-year treasury. It's the long end of the treasury curve. And it was down fairly significantly today. Not a huge day. I mean, we've seen 2 or 3 point moves in the bond. So a 1 in change move down to the low side isn't like massive damage, but it is a pretty decent move in the long end of the curve, down to 118 and nearly a tick above a half point. So we continue to see the exact same theme playing itself out. It's funny. I was going through and I was looking at some of the conversations I had around bonds, and on April 3rd, and this is when the market was sort of convinced that like around May or June we'd start to get cuts. And I thought that is a horrible idea. And what I said out on Twitter, I think, or X, or whatever you want to call it. You're welcome to follow me there at Victor Jones, at Owen Jones, 0, because I like to be difficult. I'm a bit more concise there. But what I said was cut to the new hike. And what I meant by that was the likelihood of a long end lifting on cutting the short end. So the idea that, we've been talking about this, that when you bring down the short end, what everyone had imagined in a ZERP world and a QE world, that the whole treasury curve is going to fall right along with that, right along with the cut. But the fiscal circumstances that we find ourselves in, the policies that are on the table, I could go on and on down the line. Funding 2 wars, the potential to get into something with China, Social Security is going to run out like by the early 2030s, which the Treasury curve has to think about. 2 presidents that are probably going to increase the debt by something like $7 trillion. All of this stuff. And you mean to tell me we're going to cut interest rates and everyone thinks that the long end of the Treasury curve is going to go down? Why? Why should it? Especially if you don't have a non-economic buyer hanging out there and buying bonds, or banks that are no longer, going to buy negative yielding risk-free assets. Like, it just didn't make sense. And for that reason, I think the 10-year, we've talked about this, the difference between the 2-year and the 10-year, the long-term average. I know some of you guys are like, what the hell are you always talking about treasuries for? Why do you care about bonds? Can you just come in here and talk about stocks and number goes up or number goes down? Can you just do that? Are we buying calls today or are we buying puts, Victor? What is this finance lesson? Interest rates. This is boring. But I do think at some level, some people say you get the dollar right, you get the rest of the stuff right. To me, I start with yields and I work backwards to everything else. So when I look at the market, this is kind of where I start. So I think many people may not look at the market this way, but it is the way that I think, and I can only talk through the way that I think. And we've talked about the difference between the 2-year note and the 10-year note on a long-term basis is usually 100 basis points or 1%. So if the 2-year is yielding 4% as it is right now, you would expect the 10-year just using normal relationships, which isn't always the case, but a majority of the time, you would expect to see a 5% 10-year note. And if you had a normal yield curve, meaning the longer tenors would have higher yields, that means your 30-year, you should expect to be above that 5% as well. And so I think if the market's strong, if the economy's strong or not strong, market strong or not strong, there are so many reasons to continue to see the long end of the Treasury curve move higher. If nothing else, as soon as we weaponize the dollar against Russia, regardless of whether you believe that was the right move or the wrong move, whatever, I'm not here to talk politics. None of us are here to talk politics. You can't trade your beliefs. You trade the screen, you trade the probabilities, you trade what you feel has the best discounted probabilities of occurring into the future. That's what we do here. You can't trade your beliefs. So whether you believe it's the right move or the wrong move, instantly every government out there now has a decision to make. What would it mean if the U.S. got angry at us? How are we holding all of our dollars or our capital? And do we need to make changes with that? And for all these reasons, fiscal responsibility, increases to the debt, speed that we're increasing to the debt, potential other governments diversifying away from U.S. treasuries and increasing their gold holdings. For all these reasons, I could just see the likelihood that we get somewhere towards a 5%, unless we get a recession, and a deep recession where people are now starting to buy bonds to lock in that yield. And if that's not the case, and the market doesn't want to price that, and I don't understand why you want to be buying bonds here. I don't understand why you want to be buying 10. Why do you want to be giving money to the U.S. government over 10 years for 4%? When the 2 years 4%, who's doing that? To me, it just doesn't make sound financial sense just yet. So the market will likely go and find a place where you've got, the yield matches the risk that the buyers are taking on inflating away their coupon, the purchasing power of the coupon, of the yield of the bond. And so every day we come in here, I don't have a ton on. I think I had a little bit of upside deltas in ZN, some upside call deltas. Just if we got a decent rally, I want to, I get greedy and I want to win on both sides. But it's not much, and it's just hoping that we could get to a place where we can sell this long end of the Treasury curve at more attractive prices. And probably this is a case where being patient is probably going to hurt me. We're going to go find 4.5%, and I'm not going to be a part of the trade, and that's going to be the greatest irony. Let's see what you got. Let me take a pause for a second. I can't see what's on the screen. Let's see what you guys are talking about real quick before we get going. You guys are hilarious. Money printer goes, but Brian Overcash says money printer goes burr. Always does, always has. Yeah, but here's the thing, Brian. I think what's funny to me is everyone sort of believes, because of it's this recency bias. Everyone sort of believes that the Fed controls interest rates. It's the biggest misnomer. It's not true. The Fed controls interest rates if they're involved in QE and they're buying stuff all along the curve, which they did. It's some sort of quasi yield curve control, stuff like that. They're buying 10-year, 30-year mortgage paper, 15, 30-year mortgage paper. Like that has an impact. They're buying longer dated Treasury debt. That has an impact. But if they're just moving the 2-year up and down and they're not actually buying stuff and they're letting a lot of their balance sheet run off, the market interest rates. And I think that's what everyone has sort of forgotten. And in the case where money printer goes burr, If the bond market sees money printer goes burr and you're going to print, then I need to increase the yield that I'm going to demand for you now in order to loan you money. And I think that's what everyone's forgetting, that the bond market, it's like what's that movie with Tom Hanks? Paul, are you there? You know that movie where he's like the captain of the ship? What is it called? What's that movie called? Or Laura, whoever's working back there, if you guys know the movie. Where he gets raided by those pirates. Boom, I knew it. Lauren with the save. Thank you very much, Laura. So yeah, Captain Phillips, where he comes up, goes, I'm the captain now. That's like the bond market, the long end of the yield curve, and the prices that you're going to pay for mortgages and sort of longer term debt. The bond market's the captain now. The Fed doesn't control that stuff. Growth and inflation controls that stuff. And I think that's the biggest misnomer out there, that we've been in this zombified world for like a decade and a half, and everyone thinks the Fed controls interest rates. It's like, no, you're about to find out that they control the short end of the curve, and the rest of interest rates, they're gonna watch. And what that means is, the market thinks one candidate or the other candidate is going to win. They think Trump is going to win, and they think he's going to have, if they believe that CBO report that he's going to add $7.5 trillion, I think, at baseline to the debt, they're going to price it. Why wouldn't they? Why wouldn't they price it right now, or at least discount 7.5 and say, what would I want to get paid if that's the case? Why wouldn't you do it? And I think that's sort of the thing people aren't thinking about. And the flip side is, so if we go find high enough rates that the Fed is not tightening, okay, the Fed's easing in the short-term rates, but if the market is tightening your 10 and 30 year, it's like those weird thing that everyone's like, oh, they're cutting interest rates. All right, that's good. It's good for some people. But in general, anyone that's tied to 10, 15, 30-year paper, it seems like we found a bottom in yields, at least in the short term. But who knows? I think after most cuts, it's not uncommon to see the long end lift. So the biggest question here is whether this is the temporary lift that you would expect to see off of a cut, and over maybe a couple of months we normalize and people start buying in the long end of the curve. That's totally possible. But it's very possible that we just saw a very different cutting cycle than we've seen in the past, and that the long end of the curve is going to do the work of what the bond market should actually be doing. If we're going to be irresponsible fiscally, then the long end of that curve is going to reflect an irresponsible fiscal situation. It's like your credit report, okay? You don't pay off your stuff and your credit card goes down, your interest payments go up. And if the world can see what we're going to pay for against our revenues, right? The world can see you guys bring $4 trillion in every year, and you're spending $6 to $7 trillion. So you're adding $2 to $3 trillion a year, and you don't know how you're going to pay for that. Okay, your credit score just went down. We're going to demand a higher interest rate payment, and that's effectively what we're seeing. And the question is whether it's temporary or whether it's something more permanent. I'm on the side that it's a bit more permanent. Take that with a grain of salt, though, because I've already closed out a lot of my short bond positions, and I was hoping they'd rally them. Some fool out there would rally these bad boys, and I could fade into a fool. I'm probably the fool. These things are going to rally down to like 3% and take my head off. Watch. All right, let's see what the people are saying. My bad. Too many asides today. I don't know. Maybe some of you guys like this sense of humor. Sense of humor. Someone's like, you've been telling jokes? That's what that was. Rezo says the 210 steepener worked nicely today. I just think that's the trade, man. So the weird thing is the current state of the yield curve, it's uninverted, but not by much. So the yield curve is not telling you got a super strong economy yet. Or it, I don't know. I don't want to say that. Because there's lots of reasons why the yield curve could be 10 basis points inverted. Lots of smart guys have pointed out that we might have zombified the treasury market, and that you should be looking at stuff like mortgage rates as the real Treasury curve. Shout out to George. I think his name is George Robertson. I think he's got that theory. Rezo saying the government will choke. The government would choke with high interest rates. I'm the captain now. You guys think we just spend all kinds of money? Watch what happens. You're gonna maybe Jerome Powell's not Volcker, but the bond market can do it its damn self. Han says Powell is a normalized rates man. I do think so. I think 5% is probably normal. To me, I like if we had a 5% 10-year, probably be a little bit of pain. It would. Who knows what it does to the housing market? I'm just taking a guess, and I'm an idiot. Don't listen to me. I'm not an analyst. I just stayed at a Holiday Inn last night, but some part of me thinks if we get to we get a 4 to 5%, 5% in the long end, I think you see a little bit of pressure. I think you see a little bit of pressure, a little recession. Maybe some home prices come down, rents ease, more concessions, unemployment ticks up closer to 5%. And maybe that doesn't sound like a great time. But if eggs can go back down, the price of gas goes back down, if all these things happen, we get a stronger dollar, your purchasing power goes a little bit further, probably means you take a haircut in your 401k. All these things are possible. I don't know. Do I sound a little I feel my tone and rhetoric doesn't match the euphoria of stock market prices, which is why when you join this show, there's a handful of themes that we might talk about. None of them are it's going to be weird. In 2 years or 3 years from now, I'm going to go back and I'm going to look at my work. Right? Maybe. I can't stand watching myself, but let's just imagine I go back and look at my work and I go, I wonder what you were talking about during the fourth industrial revolution, during the proliferation of AI. And not a single podcast about NVIDIA. Not a single one. Not a single one about Taiwan Semiconductor. I don't know whether to wear that as a badge of honor or whether that's the biggest L. But I don't know. Consensus is the least profitable opinion, they say. Let's keep going here. Brian Overcash says, reality sucks, Victor. Come on. I don't know. I'm getting more and more optimistic by the day, to be honest. Seems like we're waking up as a country about the direction we need to go. And I think that's a good thing. And that's not a political statement about candidates. Just when you look around, everyone goes, our house is a little dirty. We need to clean up our house. And that's sort of the first step, right? Soultran says, let's go NVIDIA. Cactus Leo, this is the side of the market I need more study on. So much appreciated. I appreciate you. In fairness, I'm guessing by the time you get to me at 5:30 p.m., do you need another AI cheerleader? You probably had to watch that all day long. You don't need another one. Fed funds is 475-ish, says Rezo. I'll read a couple more and then I'm going to get on to the next couple of themes here. Thoughts on the massive potential enthusiasm of the people that believe U.S. potential will be tapped into once Big T comes back in. Oh, you want to get me canceled, Vince. We got a good number of people in here, and you want me to talk about Trump 30 minutes into a 90-minute podcast and lose half the people. Even market participants are part of the electorate. I'll address that one towards the end of the show. I try to be respectful of people and keep it market oriented in the last 10-ish minutes of the show. That's my time. That's our time. I'll do a couple more here. Hard for long end yields to fly when everyone knows the next QE is around the corner. That's the interesting thing, CF. That's the interesting thing. But what you just said to me it's so fascinating from a game theory point of view. Because if you believe if things get bad, they're just going to do what they've always done. Then what you do is you go, well, why should I worry? Why should I worry? Yeah, Nvidia's 140. Who cares? We're trading at highs, or who cares? S&P is at 5,900. We take a 25% haircut. The plunge protection team comes in. They're going to do what they do. So why should I be worried? I'll just buy more then. And I think everybody knows this, but like that attitude is moral hazard. And, seems to be there more and more and more. But then the question becomes, all right, well, what's in the price? When I look at the S&P 5,900, am I seeing that's the price that asset should be, or that's like aided by this idea of more liquidity, a do whatever it takes type central bank situation? And I would argue it probably has a little bit of that already juiced into it. And yeah, maybe bonds see that as well. It's a really good point, and there's no way for us to really, maybe there's some way for some smart person to analyze term premium and pull that out, but I'm not your guy. All right, let's keep cruising here. A huge earnings week this week. I'll go over the schedule real quick. It's a big earnings week in terms of number of reporting companies. I think in terms of like really meaningful, the tech high flyers are not this week. And here's the greatest irony. I think we're probably shifting. Again, this is just whatever, where we are in the business cycle. And as we start to have a more impactful cost of money, like who's winning right now? It's Nvidia, but not just because of the theme. It's because people are paying real dollars. We're building real data centers. They're delivering real physical goods. Who was flying in the ZERP era? People who were building things that had very little cost and very high scale. Facebook wasn't charging you anything. They were just charging advertising dollars. There was no actual, real, tangible, physical product. The Netflixes of the world and everything else. And now all of a sudden you've got this shift. Not only on the AI side, and there's basically just one big winner on the AI side, and it's a massive CapEx play. Capital expenditures, meaning people putting money to build their individual business. But stuff like industrials, right? A lot of the defense companies, jets, so these airliners, I know that's more service oriented, but still industrials in a way. I think, don't sleep just because you look at the earnings calendar and you don't see the Teslas or the Netflixes or the Apples of the world anymore, whereas those used to be the big movers. I wouldn't be surprised if you start to see, the more industrial companies with those outlier moves, the defense companies with those outlier moves. That would not surprise me, and especially small and mid caps. Mid caps in particular, probably at this part of the cycle. Anyways, so today, not a huge day in terms of the S&P reporters. Tomorrow you get GM, Philip Morris, Verizon, RTX. So some defense companies tomorrow morning. Get ready for that. LMT. So Lockheed Martin. Look at this. Who wants to fade this? You want to talk about geopolitical premium? People will fade oil, but there's not a soul alive, at least yet, fading Lockheed Martin at 620. Anybody out there got the stones to do it? I can't do that yet. Here's the greatest irony. Everybody out there, I've been talking to you guys about. I know I'm going all over. I'm going to go back to earnings in just a second, but just since I'm remembering it, and I'm 38 years old, and I have the memory of a fruit fly, I've got to say this, or otherwise I'll forget it. I've been telling you guys the things that I sort of believe in. That's been China, nuclear energy, and materials and miners. I always say and miners, but miners I think are technically a part of the materials sector. And then the things I didn't believe in were bonds, and then by proxy, the home builders. But my position was for October. And wouldn't you know, the day after October expiration, The day after October expiration, this thing turns around by $4. I was betting it would get down to 120 though. Who knows? You can get a couple days put together. But if you looked at what sectors did well and what sectors didn't do well today, it should not surprise anybody that the underperformer is XLRE, or the real estate sector. It shouldn't surprise anybody that a lot of these home builders take a 4% haircut when the long end of the curve, the borrowing rate, goes higher and has continued to go higher. At some point, these stocks got to reflect that reality. And I think, who knows? Maybe today is just day one. Maybe it's just a fluke and people buy them up tomorrow. But XHB, ITB, XLRE, all this stuff tied to real estate post October expiration. Again, this is 1 day sample size. So don't listen to me and go following my narrative fallacy. But my point of view had been we would see a rollover. And I think I felt so embarrassed kind of that it didn't happen, that we got the long end lift, but real estate wasn't responsive, that I just pitched it and I didn't reestablish or roll it into November. That's what happens, right? That's what happens. Your day one move, and I'm not in it. So now it's, do you short the whole? I don't know. I'll figure that out later. What do you guys think? Everyone thinks I'm crazy. This is the very crazy idea. But I tend to find, let me say this, for all the crazy idea people out there, I tend to find, and this is there's a few statements that I think are very meaningful to me and how I think about risk. Statement number one, I'm just going to do one. I won't do the others. But it's consensus is the least profitable opinion. So I know after a big hurricane and a big rebuilding effort and all this other stuff that it sounds a little crazy, right? I know that it sounds a little crazy to think this way, but I just don't get it. If we already bottomed out in mortgage rates and now we're climbing higher and we're at unaffordable prices, can anyone explain to me why you should expect more profits into the future for some of the home builders? Maybe you make it up on volume, I don't know. But if without subsidies, doesn't it mean they're going to be selling homes in the future at a cheaper price in order to make them more affordable to people? Unless we're going to give people $25,000 or $50,000 deposit to get into these houses, which then makes it more affordable in the short term and also lifts future prices. But I don't know if the odds say that that's the case right now. We'll see. All right. So many asides. My bad. I don't know. Some of you guys like this. Maybe some of you guys don't. But that's the way they made me, man. That's the way they made me. GM, Pulte. So we are going to start to see some home builders. I'm super curious about Pulte's report. They're going to be sort of one of the first ones for this quarter, for third quarter of 2024. So we can start to get an indication of how some of these home builders are thinking about the future. So I do think this will be an interesting one for me to just think through, regardless if it's an interesting implied move. Freeport McMoran as well on Tuesday. Again, the ones that I'm watching are not necessarily, I'm not looking for the Teslas and the Apples and the Netflixes of the world. I mean, I will, and I'll trade them just because of the liquidity that's there. But to me, the more interesting stories are going to have to do with materials. They're going to have to do with nuclear energy. They're going to have to do with how U.S. companies see business and manufacturing in China and just supply chain in general. Next Era Energy. I'm pointing these ones out because, again, these we have exposure on in some of these names. We've talked about them. I'm not going to do the whole list because there's a ton of them this week, but a few, obviously Tesla, I'm going to be looking out for as well. You guys have strong opinions on Tesla going into earnings? I talked about this with Tom yesterday on First Call, and he pointed out the implied move here. Oh, it's even come in. Yesterday it was $15, 15 and change. I think it was $15.50. Now it's $13.80. So they took some vol out, price down, vol down to $13.80. Tom said the implied move last time around was $12. I don't remember it, but I trust his trader memory. So now collapsed into something that looks like something like it's long-term implied move. I haven't really been trading a ton of binaries, but on $13, this gets us down to 205. Hmm. 205. Maybe. I might do the no and sell some of the out of the money Novembers. The interesting thing about Tesla sometimes is that you already know. They release their delivery numbers. You don't necessarily know their expenses or profitability, but you kind of know what they did for the quarter. Then we're on the other side of their robo-taxi, so there's not a lot of new announcements. I don't know. I kind of like selling puts here. Who's with me? Ivy rank kind of low. I don't know. I kind of like those November 180s. Maybe I'm crazy. What do you guys think? But some big ones. Anyways, I'll be looking at the home builders this week. I'll be looking at materials and miners, materials and energy stocks, in particular with utilities. That's going to be my focus for the week. Let's talk about what we got. Well, the big things on the calendar this week. Not as many squawkers this week as we did have the last 2 weeks. Thank the skies above. But we do have a couple today. Parker speaks tomorrow as well. Can you guys see this? You can see this. Yeah. Kind of a quiet week this week. Existing home sales and then mortgage applications again this week. If you remember last week, they were down 17% last week. Refinancing down as well as mortgage rates started to climb higher. They're still climbing higher this week. I can imagine refis are going to be down. Who knows where mortgages are or purchases are. Down 7%. I could see it being weak again, week over week. Let's see. And then some PMIs on Thursday, new home sales on Thursday, and then durable goods on Friday. So I would guess I would rank this week like an importance. If A was important and F was like a light week with nothing, I would sort of rate this week maybe a C plus in terms of importance of the data from the domestic U.S. economy. Maybe a B minus, probably C plus though. So I think earnings are probably going to be the more important driver this week than a lot of the economic calendar. Let me pause for a second before we start talking some themes, some individual themes here. Let's see what you guys are talking about. You guys got a bunch of good stuff here. Vince K says, agreed. I think 4.4 is low. I think so too. Brian says, didn't Goldman say 3% for ES next decade instead of 13% returns? 4 might be good. I think that depends. I think if we were fiscally sane, is that 3% real return or 3% nominal return? I think that's the question, Brian. So 3% real return, I could be down with that. And I do think for anybody, because we just didn't have to worry about inflation from a government reported statistic standpoint. Even though we had a lot of real inflation and we just chose to sort of pencil whip and not include it in how we think about CPI, I think knowing real versus nominal, you almost didn't have to know it for 15 years, You did, but I think when you say expect 3% versus 13%. We got to know what we're talking about here. Are we talking real or nominal? Rezo says, what's going to stop the feds from QE? Social unrest. Social unrest is the answer to that question, Rezo, and I'm not sure if that's enough. The question is whether people understand. I might be wrong, but I've spent enough time thinking and reading and researching this stuff, and I'm no expert, and I don't have a PhD or anything like that. And sometimes I think that's actually a good thing. Sometimes I think they just kind of indoctrinate people into ideas that aren't rooted in common sense, and I get these smart people that come on and explain why what I'm seeing with my real eyes is not true, and why the truth is some other thing that's hyper complicated and needs some like advanced math degree to understand. And I'm like, bro, get out of my face. A cheeseburger is $15 and it used to be a couple of dollars. Like I don't need all your fancy math. I know what's happening out there. You know what I'm saying? I feel like at some level, just the people with common sense are the smartest people in the world right now. You know what I'm saying? The mid-twits in that graph of the distribution curve. Like the real smart people are just out to lunch. The people that just have no clue are out to lunch. All you need is common sense to figure out what's happening out there. So there's some part of me that thinks, public schools might not have financial literacy classes. They're starting to. But I grew up in a generation where you go to middle school and high school, unless you went to private school or really great sort of advanced public school, I don't know that any of them taught financial literacy. Like if you wanted to know anything about micro or macroeconomics, you had to take an intro class in college. Does that make sense to anybody else? When you sit down and you think about that, you mean to tell me that we have the world's reserve currency and we don't teach anybody a simple supply and demand curve? Why? Why not? And when some people want to talk about immigration, they can be convinced that their opinion is like xenophobic or racist or something like that. And it's like, no, what he's saying over there, it's a simple labor supply curve. Like if you taught that in the 10th grade, everybody would be much more informed voters. And if we were much more informed voters, we would vote for a stronger policy. We'd probably be in a better fiscal position. But we don't teach anybody the simplest stuff about understanding, financial literacy. And it's a good thing that we do now, but we didn't for a long time. And I don't get that. I don't know where I just went. I just kind of blacked out. My bad. Why, serious? Wow. How do you get through high school and nobody sits anyone down and explains macro or microeconomics? Am I crazy? I know they do sometime. I think in 20 to 30 states, they do that now in order to graduate. It has to happen. But in my generation, it sounds so old. I'm a millennial. That was not a thing at all. So if your parents didn't teach you that stuff or you didn't happen to pick it up in a book, the first exposure you were going to get is in an intro to micro or macro class your freshman year of college. Let's see what you guys are saying. VJ, you want fries with that wine? Speaking of fries, that's pretty funny. Jack Murphy, you called me on it, and you were so right. Brian Overcash, red pill night. I don't think that's a red pill night. I don't think it's red pilling anybody to say like we should, everybody out there. I don't care who you vote for, but I think you should know how to take somebody's policy and understand simple supply and demand curve, whether it's logical, their position is logical or not. All right. Catan saying Tesla 180s. Are you saying it's going to 180 or you like selling the 180s? What calendar are you viewing? That is a little app called Koyfin. Shout out to Koyfin. So when I view the treasury yield curve, I think I do the earnings from there, and then sometimes I do the scatter plots. So I like the market scatter plots here as well. I use it on a 1-day basis. I'm a visual guy. You can see market cap here. Obviously, biggest weight to the market here is going to be NVIDIA. And you can see on the other side, lower market caps that have had a decent day or a bad day. A gallon of gas used to be 75 cents, says Grumpy Mike. I know. I remember when I was a young guy, and I thought when stocks went up, it had something to do with like fundamentals of the economy. You know what I mean? Like when I was young and I was watching, I'd turn on, mainstream media or something like this, and I'm like 17 or something, and I'm thinking like this is all complicated. And then you get so jaded that you go, you know what? I get with the Bitcoin. I get the Bitcoin people. It's like, why sit there and try to figure out all these financial, go through these financial balance sheets, try to figure out where the alpha is, when a lot of this stuff can be disconnected from fundamentals. It's ultimately tied to liquidity. Why not just sit in one asset that's been a massive overperforming asset for 15 years? I think the landscape's going to change, but why not? I get it. I don't do that, but I get it. Define smarter. Most PhDs are well trained, but not really that much smarter than everyone else. I don't know. I don't want to start knocking on people's their accomplishments. I don't mean to say that. I have a lot of respect for anybody and everybody that has earned an advanced degree. All I'm saying is sometimes we can overthink really simple problems. And I think a lot of the things that we are doing by minimizing financial asset volatility is manifesting itself in wealth inequality, and that wealth inequality is creating the potential for more and more social volatility. So by not experiencing asset volatility, by not allowing our business cycle to end, we are potentially Chris Cole has this great quote, and I know if you guys listen to me, you've heard me say this in the past, you've heard me reference it. Volatility cannot be destroyed, it can only be transmuted. So by trying to, when we refuse to take the pain of the financial market volatility by doing things like QE or money printing or whatever, trying to ease our business cycle and smooth out GDP on a long-term basis, then there are effects to that. And so perhaps not having financial volatility is manifesting itself in increased social volatility. And that's sort of the way I see the world. I might be 100% wrong on that, but that's kind of how I summarize it or simplify it down. I remember buying an ice cream at the drugstore for a dime. This is one of those shows where we just talk about what the world used to be. Cactus Leo, Trump learned the fry line. That was wild. Just again, I want to talk about it so bad because I just thought, put your partisanship to the side. Low key goat political move. I don't care if you like him or not. That was a really smart political move. You guys tell me if I'm wrong. I'll tell you why I think it was a smart political move at the end, but you guys tell me if you think I'm wrong. But let's not go at each other's heads over politics. Who cares? They're the same candidate. Jack Murphy Live says no one is as smart as me. That is so funny. First of all, it's not true, but if it was true, we've got problems. All right, let's keep going. You guys are awesome today. Thanks for being super active, by the way. I can tell the numbers are up, and that is because you guys are being crazy active, which I appreciate. Let's talk. I'm going to go really quickly. I don't think there's a big update here, right? No no real changes in liquidity from the China standpoint. And if we don't have that, it's pretty simple, man. Like in the absence of new liquidity headlines, this thing kind of just leaks a little bit lower, but the rate of change to the downside seems to have diminished. So we're only down 40 cents today, which, what is that? A little over 1%, something like this. So, you know, I don't know. I might be crazy. I don't know why I feel this way, but the rate of change for taking the air out of the tires of some of these things seems to have slowed down. They seem to have, Baba and Baidu seems to have found a home somewhere around just under 195-ish. I told you guys this before. It's still the case. I'm collared up on a lot of this. So if these things keep leaking lower, it's not going to hurt me. We're short upside calls, long puts on most of this stuff. I think I'm long puts at like 100 on Baidu, and same thing with maybe 105 on Baba. So these things want to leak lower. It's fine. But I don't want to abandon that. It's basically, my position is a synthetic vertical spread on most of these. So it's JD.com, Alibaba, Baidu. To me, I don't know why, but I think Baidu is the most interesting. I don't get why people don't start pricing Baidu as the Chinese AI play. You know, like if Tesla, doesn't Tesla have to partner with somebody on this electric car thing? And wouldn't it likely be Baidu or anyone that wants to come in there and do this in China? Isn't it going to have to be Baidu? So wouldn't that make them a likely AI play for China into the future? Or am I just kind of crazy? Which is, I think, eHang, all these companies, these small companies I'm about to mention, are probably total frauds and just appear on paper. Because that's the possibility in some of these Chinese names. But eHang is like a flying drone company. As I say that out loud, I'm like, you're going to lose all your money. That company's not real. So it's I'll throw it up on the screen. It had a pretty good day today. Weibo, so WB, Neo, I think. So a handful of that stuff. I'm in it all. Probably too much of it. But not much of a change in the narrative here. And I don't think there will be. The theme for me, and I know I focused on yields at the very beginning of today, but the obvious theme was a strong dollar. So euro got whacked a bit. Most currencies got whacked today relative or versus the US dollar. And so you're getting this situation. Yields are climbing higher. The dollar is strengthening. And that strength in the US dollar helped, in my personal opinion, to put downward pressure on dollar-denominated commodities. That's kind of the way it works, right? Very simple explanation. I know most of you don't need it, but just in case we got anybody out there that this concept isn't crystal clear, let's do it like this, right? All right, let's do it like this. Let's imagine that this watch is I don't know, bar gold, right? Bar gold or silver, something like this. And we got $1. We pay $1 for this dollar-denominated commodity. Well, if the dollar gets stronger, it goes up in value, it will take less of these dollars to buy that same product. So this product, the price goes down because the dollar is stronger. So it takes less of these things to buy this product. Now, if the dollar gets weaker, well, now it's going to take more of these dollars to buy this product, so its price goes higher. So whatever the dollar does relative to a dollar-denominated commodity has an impact. So we saw a strengthening dollar here against the euro, against the British pound today. We saw it in the Aussie dollar. And yen's kind of a special case, but we saw it in the Canadian dollar as well. So the point is, okay, what happens when you get a strong US dollar? some of your dollar-denominated commodities might be a little bit softer. Yeah, so we got a strong, much stronger dollar today, which to me is surprising. And kudos to Ilya Spivak, who called this out yesterday on First Call. He leaned short the U.S. dollar, which to me was a bold call. Why was it a bold call? Because we've already had, look at the strengthening in the U.S. dollar. We've already had the weakening of the euro. So yeah, like the idea that you would want to continue to play this downside trend, that's sort of that's a bold call. It's much easier to be, in my personal opinion, a contrarian here and start to play the weakening of the U.S. dollar, given where we are. But shout out to Ilya. He was on the exact right side of that trade from Sunday night into Monday. And we got some additional dollar strengthening across a basket of securities. I don't have a ton on right now in the dollar. I would rather bet bonds. I just think there's so many things within currencies and equities that I have very little confidence in. So the things that I have a bit more confidence in, rightly or wrongly, that's bonds, it's nuclear, it's China, and it's metals. And I'm just sticking to the stuff that I feel confident in. I don't necessarily need to have chips all over the board on stuff that I don't feel like I have a decent read on what's happening with risk. All right, let's see what else you guys are saying. Smarter move would have been asking why there are so many ingredients in the fries. It blows my mind. Blows my mind. Because I have gone down that rabbit hole looking at not only McDonald's fries, the differences in ingredients, but you can look at the buns, the ketchup even. You'd blow your mind what's in their ketchup. How many ingredients are in the ketchup. So what's funny is, like, if a person from an older generation than me will they'll talk about where was I? Sorry about this. Like we don't want to give our kids McDonald's ever. And I think my mom wanted to give them McDonald's one time. We're like, no, we don't do that. And she's like, oh, you guys had McDonald's when you were kids. It's fine. And it's like, yeah, but it's not the same. It's not the same at all. That's literally not the same as when we were kids. All right. I don't get what the milk stuff is you guys are talking about. McDonald's fries were healthier when fried in lard. Yeah, the lard thing is true as well. All right, let's keep cruising. Bitcoin took a breather. Here today. I'm still long a couple of little micro contracts on it as a trade. We bought them at 61. The smarter thing to probably do was to start lightening up as we got to 70. But some part of me wonders, now that we've broken through this upside channel, if maybe on the reversal you get a little bit of a bid back in 65, so we establish a new range, new upside price range. So that's the way I'm playing this. So I'm holding long Bitcoin here as a trade. I'm not talking about the long Bitcoin I have for just investment purposes, this dead money or dead assets, as Tom called it on Friday's First Call. I'm just, as a trade, I've got some long delta here, and I kind of feel okay with it. Let's see here. Oh, why do you guys tell me my camera zoomed in like crazy? Sorry about that. Sorry about that. Camera zoomed in on your nose and lips, Chief. Sorry about that. All right, let's keep cruising. Gold up at 27.55, made a new high today, which is killing me because I don't have any paper gold trades on. this little just like keep climbing, slow grind. I don't know. I was out of a lot of this stuff. I think at 2,500. So the last 200 points I haven't really been a part of. We were long Newmont mining. We're long. Geez, you name the miner, I probably own it. And not only do I own the miners, then I own GDX and GDXJ on top of it. So there's gold exposure indirectly, but I don't have anything on in gold right here. Another upside, a little bit in silver. We're at 34, where I'm long upside calls here. Anyone else long silver on this breakout? That was a weird call. I know it was, but when we are at 32, we've knocked on the door of 32 like 4 or 5 times and rejected it. But it seemed like silver didn't want to go anywhere. And with gold steadily climbing higher, and silver actually has an industrial use. So, with gold, that's a nice diversifier against just a crazy economic system. And central banks are buying that thing up. It can't, so there is no real like two-way trade in gold. Silver a little bit different because there's a higher beta here. But it just seemed like at some point, come on, we got to break above 32. And so I never buy tops, but this was a situation we kept talking about it over the last couple of weeks. I'm long the upside, long the breakout. But how do we get long through just upside call spreads? And we got a nice break today. Our physical bars are dancing, though, Vic. Yeah. See, Lone. They call you crazy, They call you crazy. You got to be comfortable with people calling you crazy. I laugh it off. And I come in here and I say some stuff and I say it with jokes because I don't think you guys are ready for, you got to serve medicine with like sugar sometimes. So, saying it as a joke, it doesn't seem as crazy. But 2 years ago, when we were doing that Jones and Friends show, and I was buying up silver and telling everybody, I was buying up silver and physical bars of gold. You sound absolutely batshit insane. You sound batshit crazy. And I just laughed it off. I let everybody call me a prepper. Okay, that's fine. And now look at it. Now look at you. All right. Let me give you. We're gonna end a little bit early, probably 15 minutes early, just because this is my moving week, so I got a bunch of stuff going on. So I appreciate you guys some patience, especially logistically with the setup and everything this week. So let me give you my quick point of view. When I saw the Fries video from Sunday, first of all, I watched the whole thing. I don't like watching clips, so there was the whole visit was about 35 minutes. So there is, I think Forbes News posts like the whole 35-minute video. Some part of me goes, you just watched a president or a former president serve fries for 35 minutes. What are you doing with your life? But I thought, there's two types. There's probably like two types of messaging. Okay. We've been talking about this there's a K-shaped economy, right? That if you're an asset owner, if you're a homeowner, you feel good. You feel good because yes, you've got inflation, but your asset inflation in your portfolio and your Nvidia stock and your home prices, you feel you're okay. What's the problem? This is great. Stocks are going up. My portfolio's going up. My 401k is higher. My home's worth more money. My rental property's worth more. Or I'm getting more rent from my rental property. Whatever. Are there minor sort of annoyances here and there? I'm sure there are, but you're probably feeling okay. And then there's another group. This is a larger group. Let's call it 60% of the population who are non-asset owners. They're wage earners in the economy, and those wages are not going as far as they did a couple of years ago. And I think also there's two messages from the media happening right now, right? There's this message of joy, and then there's this message that we're not on the right track and we need to get on the right track. And, we regardless of which bubble you live in or which bubble of confirmation bias, I'm just acknowledging that there are two bubbles out there, and one's a little bit bigger than the other by volume. So when I watched the former President Trump serve fries this weekend, I was like, one, what a crazy troll, because he was trolling the idea of whether or not she worked at McDonald's or whatever. I don't know if that's important. Who cares? But I thought just I could see a lot of leaders going into a place like that, and then the worker is the one who does the work, right? They're showing the president, this is what we do. They put you put the fries in the grease and you put it in the thing and you serve it or whatever. But the fact that he did it himself, and seemed a bit comfortable doing it. I don't know why I'm talking about this. I'm gonna get in trouble. The fact that he seemed comfortable doing it, I thought was like he was speaking to a group of individuals in the country, and I think one side is going to see that as pandering, or they're going to see it through a negative lens. But I think that group that he was talking to, I don't think they're going to see that through a negative lens. I think they're going to see that through a very positive lens. So it's like most of the time when I see those publicity stunts, I just laugh at them. And I was like, this one might have been a pretty interesting political stunt. It might have been a really, really smart political stunt. Am I wrong? You guys tell me. What do you guys think? Again, I'm not trying to be like, I'm not trying to support anybody. All I'm saying is I'm a person that works in public speaking and messaging. And I looked at the message and I go, if I'm speaking to the working class of this country, the message of the president rolling up his sleeves and doing work with his hands, feeling comfortable, getting instructions, that's called servant leadership. And like, again, I know people have strong feelings, so I don't want to go crazy. I just thought like it was for the message, for the people he's going for, that was a really politically savvy message. And usually I would avoid. Usually I think stuff like that's silly. All right, what are you guys saying? Vince K. See, I'm not that crazy. Vic, this is fantastic marketing. Yeah, I do. That's what I'm saying. I wanted to just, I'm putting politics and partisanship, and I know everybody's charged, and especially this one. You can't, like, if I say something positive about Kamala to Trump supporters, they barbecue me. If I say something positive about Trump to Kamala supporters, you get barbecued. So mostly everyone hates me. But I thought, just as a marketing point of view, the message that sent out at this particular time, I thought was brilliant. Cruz, why are you talking politics here? Man put fries in box. That doesn't make him person of people. And I'm a Republican. Maybe. Cruz, I'm saying it because I think I was asked early in the show what my thoughts were on it. And I said I didn't want to talk about it at the beginning of the show. I save all of that particular commentary for the last 15 minutes of the show. So that's why. But I'm with you. I get it. I do also think, in fairness, October 21st, we got an election a couple of weeks away. All of that stuff is fairly meaningful to bonds. It's fairly meaningful to asset prices. It's fairly meaningful to future policy, and then how to think about investing decisions. Is McDonald's fries important to all those things? No. But, I think after November 5th or 6th, I probably won't talk about this stuff as much. All good, Cruz. I get it. That's a good question. I don't mind an inside fastball every now and again. Catan says staged. Come on now. All right, I'll give you my response to that. Of course it was staged. He's the president of the United States. He can't just walk into a random McDonald's without it being set up and staged. 100%. I agree. But all these things are, when Joe Biden walks into an ice cream shop to get an ice cream, that's staged. The people are selected. Kamala does the same thing. So it's like, I'm with you, but all this stuff is. And so I'm judging it by the message that they're sending out and whether I think it was effective or not. That's all. Yeah, you'll be talking about the new world, the new world after the 5th. That's funny. All right, everybody. I think that's going to do it for us. That's going to do it for today. We had a couple of other things on the list, but I don't think they're meaningfully different. We touched some nice new highs in nuclear stocks today before fading on the close. That was the same across major ones that we've been talking about: CCJ, SMR, which has just gone nuts to the upside, trading near 20. I collared that stuff up, by the way. I don't think I said that on Thursday. So SMR has had such a massive run. I think the first time we talked about it on this show might have been $9, $8 to $9. We were somewhere in this price level when we started talking about it. So I collared that up for sure. So do me a favor before you guys get out of here, hit the like button. Subscribe to the channel if you haven't already, and follow me and engage with me on Twitter at Victor Jones. Owen Jones is 0 because I like to be difficult. If you would like to send me an email directly, you're more than welcome to. It's victor.jones@tastylive.com. Just a quick heads up. Next week, we may be playing some replays next week. So this week we should be good to go all week long, but I'm going to be taking off and I'm going to be traveling, headed back over to Singapore and getting adjusted to the new time and spending some time with my family. It's been a while. So next week, we'll most likely play replays, or I'll find a replacement, something like that, but all good this week. All right, everybody. Until tomorrow, we shall see you again. Appreciate everybody's participation. We'll see you back here tomorrow. Same time, same place, same great network, only on Tasty Live. Peace.